Hi and welcome to this Blueberry Markets video update with me, John Kibler, head currency analyst. In this video we're going to take a look at the pound US dollar price as price continues to fall, and the pound has fallen across the board really after the latest Bank of England statement. So what we've had is the Bank of England raised their interest rates, and they've raised their interest rates to 3% from 2.25%. Let me just change the colour of that pen a second. And you can see on the side there I've got a summary just discussing kind of what happened over here, what happened today. We can see here the Bank of England raises interest rates by 0.75%, which is the biggest hike since 1989. There was also comments from the Bank of England governor after talking about a very challenging 2-year recession, basically saying that the UK is in a recession at the moment. High interest rates would be welcomed by savers, but will have a knock-on effect for those with mortgages, credit card debt and bank loans. And inflation is at its highest for 40 years. So lots of negativity here for the pound. Not only that, but it was put under pressure then by yesterday we had the federal funds rate from the US. They hiked to 4%, talked about lowering the pace in which they will tighten. However, that means that the interest rate is going to go up slightly higher than they last anticipated. So the news that this could reach sort of 5% and beyond was news to investors, and the dollar started to strengthen off the back of that. So you've got negative pound data, positive dollar data, pound dollar struggling to really make any successful gains at the moment. And if we have a little look at what's going on the pound US dollar chart, we can see that price has recently traded back below that 116 handle and pushed back to the downside here. So when we looked at the pound US dollar price at the start of the week, we were talking about whether price can trade up to the 116 or stay around the 116 level, and that hasn't happened. We were looking to see if price would trade up a little bit higher, maybe towards the next level of resistance, which was around sort of the 1.18 or the 1.2 level. That didn't happen. Instead, price has stayed within this longer term channel. So if I just go up to the weekly time frame, I've put this trend line in, and we can see that price is reacting from that trend line now, and it looks to me that we are seeing the impulsive phase of this downward weekly trend. So if we are going to see an impulsive phase, we could see price come back into the lows, which is around the 1.07 handle. And if price is going to do that, and what we could expect is a trend to form on the 4 hour. So you can see on the 4 hour, we plotted lots of levels in here before. If I just remove some of these because they're not as relevant anymore. But we can see here, this is the area we're looking at, that 116, and price has just started to trend lower from here. From a 4 hour perspective, we started to make those lower highs and lower lows. So really speaking, if we are going to impulse to the downside, if we are going to impulse towards this 1.0700, then we should see the market continue to make lower lows and lower highs. And we can see there's a couple of areas of interest for price to pull back to. Now, the first area of interest is going to be this area here, around about the 1.1380 handle, or we could even argue the 1.14 handle, because price has recently found a small area of support. It's actually been resistance in the past as well. So if price was to come back up into this area here and we were to see bearish price action, we could expect a move back to the downside here. Alternatively, we could see just very shallow pullbacks, and if we do see very shallow pullbacks, and what I mean by that is very low small ranging candles, if price maybe stays within this bearish candlestick range, maybe tries to break the high but fails, that could also be an opportunity for sellers to step back into the market. But we've got good confluence down here. Nice bullish trend line, or the bearish channel support down through here, combined with that key horizontal level of the 1.0700 handle, could be where pound US dollar is going to end up next. Okay, we do have some others in the way. We have this area through here, 1.0950. That could also be a little bit of a sticking point. for price, but it looks to me like we're going to probably see a bit further downside on the price of pound US dollar. So hope that made sense. Hope you enjoyed it. If you did, leave this video a thumbs up, subscribe to the YouTube channel to see some more Forex trading content, and I'll catch you in the next video.